Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap. In our pre-market session, we look at the macro to the micro, the structure of the market, and then we drill down and we determine where our trade levels are going to be, what our targets are for the day, and what our main hypotheses are. This is a subscription room if you want more information. But what we do here, we do these pre-market sessions and then we do live trading and analysis. Send me an email at quantumleapfutures@gmail.com or give me a call 647-545-8065. My name is Doug McKay. Please follow me on Twitter at Crazy2, or if you want to watch more of these videos, do a search on YouTube for Quantum Leap Futures. Before we get going, this information is for the purpose of educating members who want to expand the knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves risk loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes. Please trade your own due diligence and your own risk metrics. Okay, so yesterday we were looking for a rotational day with an upside bias. At one point in time, we were even thinking it could turn into a trend day. I did think that we would take out the overnight low first and then rotate up. But I did say in yesterday's pre-market session, if we left that overnight low alone and got back up inside of yesterday's range, then we are likely to go up and close that gap and take out the overnight high. So they came up, they tried to break out of the prior day range, went up, hit the overnight high at 14, didn't quite get to the naked close. That naked close is still above us up at 2015. And then they rolled over. At some point in time, the Russell put in, broke the IB to the high side and to the low side and put a neutral day in. It actually happened pretty early on. So for the rest of the day, we were looking for the ES to follow suit and go down and break the IB to the low side and go down and take out that overnight high. And we actually put in what I consider to be a neutral extreme day. It's not real extreme, but we did close roughly, just under 5 points below the IB, but we did close near the low. So I consider this to be a neutral extreme. Anyway, it was a grind yesterday. It was a real grind, trying to get any type of runner going. But we ended up making a day of it. I always like to start my morning with the same routine. I'm not going to change it. I do it because it keeps me thinking in terms of the bigger picture, and that's to start the day looking at a basic chart with an 9 EMA and a 20 SMA. And I'm looking for slope and separation, strength of the trend, and where the trend is being challenged or violated. You can see on the monthly we had this very strong trend. Then we broke down 2 months ago, closed again last month below the 9 and the 20. So far we're coming up and testing the 9 and 20. We're really at an inflection point here, this month. Still got half the month to go. We don't know whether or not we're going to break back above the 9 and 20 and can get continuation up, or whether or not we fail again and come down. It's starting to look a little bit like this pattern right here, just before we had a strong downward trend to make those lows back in 09. But the trend itself has been challenged, so the upside trend on the monthly has been violated. On the weekly, we had that strong trend, good slope and separation, consolidation, came up, close above the 9 last week. We're currently trading between the 9 and the 20. So the trend itself is still down, but it's being challenged right now. Going down to the daily. The daily is, we had this trend down, then we went into consolidation, and now we've got an upward trend starting. We do have a naked cross down here at 1938-39 area. We are coming back right now and closing this technical gap that we created last week. A tech gap close could bring us down into the 1983-84 area. But we do have a naked cross down here that will eventually get filled at some point in time. But the trend itself on the daily is to the upside. Going to the intraday, you can see that we had the strong trend up, and then last night and yesterday they rolled over, and we're starting to get slope and separation to the downside on the 4 hour. On the 1 hour, we've got consolidation, and we're trying to hold back above the 9 and the 20 after coming up and breaking back above. 30-minute, more consolidation, but we are trading above the 20, but we just broke back below the 9. And then just going down, 15 minutes is showing consolidation, and then the 5-minute is showing a possible start of a downward trend. We have a naked cross right now at 95.50. Write that down in your journal. Likely come up and close this naked cross sometime coming into or just after the RTH open. I think we're going to get a bit of a rally to try to test the overnight highs again. But that's my my own hypothesis. We were in an upward trend until the retail sales came out. Let's take a look at the news. We had core retail sales month over month missed. Expected 0.1 minus 0.1 came in at minus 0.3. PPI came in missed again. Expected minus 0.2 came in at minus 0.5. Retail sales came in lower, and core PPI came in lower. 10 o'clock, we've got business inventories, and then 2 o'clock, we got beige book. Remember, we're in earnings seasons now, so earnings are going to drive this market. Okay, so let's take a look at the big picture. Let's get rid of this. Open up this. So we broke out of the microcomposite value area that we've been following. It got above the 77 value area high, and then we popped up and we tried to hold value up here in the 2007 area. Yesterday we couldn't hold that value, and they rotated down and closed down near the lows of the day. We have a key line in the sand below us right here at 89.75. I'm actually going to use 89.25. I'll show you why in a minute. But that also is just below the value area of these 2 days where we came up and accepted value above the breakout. We came down, tested the below the value area, then we came back up, accepted value in the 1901 area. Then we had that big trend day. Then we gapped up, accepted value at the 72.50. Then we broke out, accepted value at 82.50, gapped up again, and then we tried to hold value up here at 2007, and then now they've broken down below it. So if we get below this 89.75, we're back into the value of where we tried to hold above, or where we did hold above the longer term price acceptance or value area. And I would expect a move below the 89.75 is going to bring us down and test this 82.50. You do have this 85 area right here as a target if we break below 89.75, but I would really look for continuation and then possibly come down and test the 77. The next key line in the sand is going to be the 75.50. Below 75.50, we're back into value and back into this balance area, and we're likely to make a bigger move down to look for buyers, and the big destination below us is going to be in this 1952.50 with the 48.75 as the next key line in the sand below that. Below 48.75, then I think the interim top is in, and that we're going to rotate back down into the lower 1900s and possibly come down and test the 1800s again. But we don't know when that's going to happen. All we can do is trade the levels that we've got. We've got balance right now in around this 95, above us 99.25, and below us 89.75. Those are our two breakout points. Above it, look for a move back into the 2000s, with the main target being 2004.25 and continuation up to 07, and then resistance coming in around 11.25. Above 11.25, look for them to go and make a run for the range and try to get a breakout, close that 1550 naked close. So let's take a look at what's happened overnight and start moving our levels over. So currently right now we have an overnight high at 98.50. And we have an overnight low of 89.25. Oops. And move this line in the sand down just to below the, not the overnight low. So we got 989.25, and we've got the October Fed number at 88.50. I'm going to move the line in the sand down to 88. I want to be below these two key levels, and then below that I'd be looking for a move to the target at 85, but the main target being the 82.50. And then just below, just move this up, just below that you've got 82.50, then you've got the 79.75, but I'm actually going to adjust that now. I'm going to take that off because I don't think it's going to be as relevant as the 75.50 area. Currently, with the overnight high at 98, what was it? Currently 98.50. Our 20-day ATR target right now is at 35.38. So our downside ATR target gets moved down to 63.25. We're starting to bring some of these lower levels into range. What do I mean by that? Well, our 20-day average range right now is 35.38. We've tightened up in the last couple days in terms of range, but the 20-day range can take us down right now as low as 63.25 very easily without extending the ATR. Our upside ATR target off the low at 1989.25 plus the 35.38 takes us to 2024.50. So that takes care of our upside and downside target. Our current overnight VPOC, we've got a pretty decent Gaussian distribution bell curve overnight with the VPOC, the most traded price, at 94. It's right here at the midpoint, and the VWAP itself. And currently where we're trading, it's also yesterday's value area low. There is an LVN right here at 96.75, just above the VPOC. We stole the VPOC into the close yesterday, but you've got 97 and 98 just above it as an LVN and the IB. So I'm going to use the 99.25 because I want to be above the, actually going to have to move it down to 99, so it encompasses the LVN. So if we come up here and we take out the naked VPOC and we challenge this LVN, it's a low volume node between the middle distribution and the lower distribution yesterday. We've got the overnight high right there at 98.50. I'm going to be watching 99.25. I don't want to get long until I'm above 99.25. You could even make an argument of waiting to get above 2,000, but I don't think 2,000 hasn't been a big number for us. It's really been in around that 99, 98.75 area. So I think if we break above the 99.25, you could get long into 2,000 and push through to that first target above, which is going to be the 0150. Actually, it's going to be 01.25, and then the 04. Let's see, what's the 04.25? I'm going to use 04 because, or I'm actually going to use 03.75 because it's that it's the VWAP. We got the VWAP and the midpoint right there, and the CHVN all within the 93 to 94.25 area. Then actually, and this is going to be a trade area. Sorry, trade areas are targets, but they're also entry points. Above there, then I'd be looking for that 07. And then you've got the value area high just above at 08. And then above 08, I'd be looking for a target of the IB high at 975. Resistance possibly coming in, responsive sellers stepping in at 1150, but a break above 1150 is going to give us a target. I'm going to use the 1475. It's going to be trade area 2. And then above that, we've got the naked close at 15, the CLVN at 1750, CHVN at 21, and then our ATR target up here at 2450. A little bit of responsive, possible responsive selling at 2550, and then our targets to the upside 2750, 3075, and that 3550. Don't think we're going to get there today. So those are my trade levels inside of the range. We've got the value area low and the naked close and the VPOC right here at the overnight VPOC at that 93, 94 area. It's 94 area, sorry. So what I'd be looking for is for them to come up here to this 94, test the value area low and and take out the naked close the gap, and then possibly find responsive sellers, come down in through the 91.25 area and come down and take out this overnight low. And then if we can't hold the 88 level, a move down into 85 and 82 with support possibly coming in at 75. Anything below 75, then I'm targeting a move down into the 53 area down here. But our ATR targets up here 10 points higher at 63.25. Don't know if we're going to get there and turn today into a trend day. I do have to recognize a target here at 77, so I'm going to put a trade area there. Because if we break 77, get back inside of the longer term value area, then a move down to 75.50 could be traded. I think that if we come in, even if we come up and test the other side of the lower distribution and fail, take out the overnight high and fail off of that 99.25 level, and then come down and break back through, I think we're going to see a move back into the 80s. Two scenarios I'm looking at. My first scenario is we come up, we test the yesterday's range low and take out the gap and possibly come up and take out the 95, maybe take out the overnight high, test that 2000, fail off of the 2000, come down and rotate down through into 82.50. That's my main hypothesis. I also have to look at the possibility of opening up outside of range and outside of value and seeing initiative sellers stepping in and just taking us right down to take out the overnight low and break that key line in the sand for a test down to the 83 area. My secondary, my third hypothesis, if we get above the 99.25 level, is we walk our way back up into the 2004, possibly fail there and chop around between 99.25 and the 04 area. But if we break above the VWAP, then I'd be looking for a continuation trade up into the 2007, 2008, complete the 80% destination value area trade, and then possibly work our way up into that naked gap up here at 1550. I think it's going to be a rotational day with a downside bias down towards 82.50 today to come down and test this level that we accepted after we break out. But we have to wait and see what the market gives us. So we're trading 92.75 right now. We could put in a lower overnight low before the market opens. We've got 25 minutes. Let's take a quick look at gold. Sorry, I don't have my gold chart open, so I got to go get it. Gold made a move again overnight. And I don't know why my gold chart doesn't want to hold my profiles, but remember that key next big target above is at 78. We got as high as the high is 76.90. So we haven't hit the 78 yet. I'd look for a move, continuation up there today, especially if the markets move down. Just going to see where our current balance is up here. Current balance is 64 area. 65 area. So if we fail, if responsive sellers step in here at the 78 level and we fail from there, look for a rotation back down into this 65. You could use 69, 68 level as a breakout trade to bring us down into the 65. If we get up here and we accept the 78 level, look for continuation up into that, that is not correct, up into the 83, 84 area. Remember, the big target is still above us. The composite volume point of control, the most traded price going all the way back to 2008, is still above us. This has been my main hypothesis all year, is to come up into this 1200 area and re-challenge that composite level and poke ourselves back into the 1200s. If we come up here and accept value, I'm actually looking for a move next year into the 1300s, but let's not get ahead of ourselves. So that's what I'm looking at. That's going to complete our pre-market trade plan setup. As always, trade well, trade safe, and we'll catch you on the flip side.